What's up, everybody? Welcome to the Stock Market Brief Show. We have a lot to discuss today after today's big old move to the upside. Tomorrow is a very important day, so we're going to be hopping right into it, giving you some updated macro. We're going to get into the SPY expected moves. We're going to get into the Qs. We're going to go into Bookmap. We're going to go into all sorts of indicators and so forth on today's show. So first and foremost, let's talk about the calendar, right? The economic calendar. There's a lot of things that go on from an economic standpoint that could really punctuate moves on the tape, meaning the price action if you're trading intraday or swing trading, etc. So what was today? What caused these big moves? We had the ECB interest rate decision and we had retail sales later on tonight, which is Pacific Standard Time, so 8, 9, 10, 11 Eastern Standard Time, 11 p.m. is the BOJ interest rate decision, so Bank of Japan might be one to watch and see how that's going, because actually lately, if you've been watching the price action, it's been doing rather well. This is an iShares MSCI Japan ETF. You can also look at small cap ETF here for Japan, that's SCJ. Now, what is tomorrow got on the plate? We got some important stuff. We do. Okay, not only are we going to get some Fed speak, which can obviously cause movements in the tape, all right, so that's going to be one to watch in Michigan Consumer. However, we also got triple witching. Ooh, now what is triple witching? Triple witching is the simultaneous expiration of stock options, stock index futures, and stock index option contracts all on the same day. Something to be just familiar with. This creates volatility, particularly in the final hour of trading. So be aware of some insane moves. And this is, volatility doesn't mean just one specific direction, meaning down. This could go either way. So we'll map out some key levels today. What took place as far as the macro data today? We had U.S. retail sales data, which rose 0.3%. And it also accelerated here 1.61% year over year. Now, this was pretty much exclusively due to the big increase that we're seeing in sales of building materials and motor vehicles, which make up a large portion of that report. The ECB, they did decide to raise their interest rate 25 basis points, and Lagarde had said that we're not thinking about pausing. Now, this makes sense because if you look throughout the euro area, such as Finland, inflation still remains relatively high. France seems relatively high and sticky. Germany, it's coming off, but still seems rather high. Italy is up there too. And then even if you take a look at Sweden, it's up there pretty darn high as well. So what took place today was a huge move in the euro. We're looking at the FXE, which causes the dollar to break down. Because why? Well, they have a negative correlation on multiple time frames. It's extremely negative correlation. As you can see, dollar goes down, euro goes up, dollar goes down. Okay, now I want to call out that now we're at the lower weekly expected move for the dollar, and we'll touch more on that later, because what drove today's move was this fall in the dollar, and I can show you just how impactful of a move that actually was. Now, as far as interest rates go, well, take a look here. It's very interesting that the United States, right, we just got our Fed interest rate decision. We remained at 5.25. However, Canada, they rose them 25 basis points. Australia, they rose the euro area, right? And then ECB, and then Singapore as well. So what's it look like here? Because we did mention that the Fed was talking about skipping, pausing, or potentially, having to look at more data. Well, being that we're the only country that did, the market is right now trying to put in the probabilities of another 25 basis point hike. I don't necessarily know if that's going to be the case, but the probabilities are leaning towards that as it stands. Now, take a look here. This is the weekly expected move list. I update this every week that I share. This is one of the features here, expected, this one right here, for my Discord group or for my Patreon group. This is one of the things that I do. I also do daily, monthly, but I just added this for some context. This is not something that I typically do. This is brand new. I added this today just to give people this column, by the way, just to give them an idea of, hey, is things outside of the weekly expected move? Because if you know expected moves, you know that 68% of the time, price closes within one standard deviation of, if you're looking at it in terms of a distribution curve. The more liquid the product, the more accurate it is. So SPX is the bigger product of all of these, which tends to be more accurate than 68%. So I want to call out here that if I look here, it says this column that says outside, question mark. It's telling us that, hey, when it's green, it's trading at the upper expected move or above it. Okay, and you could see here, we have one more trading day left in the week, and almost, the majority of these big products are outside of their weekly expected moves. Okay, if it's yellow, that means it's within it. Okay, so for example, we'll just take utilities, 66.94. The upper expected move is at 67.63. So we're just $1 beneath that lower expected move. Okay, now what is interesting here is take a look at the dollar. This is why it's so important that we've been talking about these correlations. Sorry, that's not the chart. We've been talking about the correlations that the dollar has with other various assets. Could be gold, could be the S&P 500, could be just equity markets, a whole bunch of things from an intermarket perspective. Well, the dollar, as we just recently discussed, went outside of its lower weekly expected move. And if we're thinking about this in terms of probability, where 68% of the time it closes within it. So if the dollar does bounce tomorrow, what does that tell you from a negative correlated state? It means that a lot of products could potentially come in. Now, being that it is triple witching, you got to be cautious of that because we're going to see more intensified volatility. I don't typically like trading those days unless there are very, very clear setups. But I just wanted to call that out and show you just how many products right now are trading already outside of a one standard deviation move. If you're interested in the swing trader community, I have a link in the pinned comment below. I do trade ideas, watch list stuff, quarterly, weekly, daily expected moves, the zones, which I'll get into a little bit later too as well, because there was actually a cool update there that I saw take place today. And then I also give out some stock market indicator charts, the ones that I use on this show. Let's hop into the S&P 500. I want to first show you the book map, which shows us the order book, which allows you to see behind a candlestick. This is very important stuff if you're trying to read the tape intraday, because you can build good risk to reward levels at key areas. Okay, with there's a lot of liquidity right here, right? So 494 contracts at 4485. You can see price came up to it today and rejected. Yesterday, we were talking about this level right here. I think it was I think it was a little bit lower, 4440, I believe it was, and we absorbed that, and you can see price came up to the expected move that was yesterday's expected move at 4453, which is right here, and we paused. But then after we started to break through that level and hitting a 2 standard deviation move at 4481, you can see we came right up to that area, which was a 2 standard deviation move, a pretty rare occurrence for this market. Going into tomorrow, I just wanted to call out we do have some liquidity up here right overhead. So if we clear that, that can open the door to the upper expected move, which is 4,500, 4,503 and some change. The lower one is 4,431. That is for ESU, okay? We had that contract roll, so if you're looking at the old one, then it's going to look a little bit obviously different. Let's continue on. The SPY, okay, this is the Spider ETF. We did hit a new yearly high. This continues to press on. The RSI is getting up there, right? We haven't seen the RSI that high on a daily perspective since right over here where we saw some volatility, boom, boom, boom. So yeah, a period of digestion will come in the near future. How soon will it be? Well, we will talk about that on a more zoomed in time frame. So intraday, we saw this megaphone pattern. If you follow me on Twitter, I posted that, or if you're in the Discord community, I kind of gave that announcement. And these these are bullish, these are bullish patterns, right? Where price moves up in a bullish context above week to date, month to date, and a 5-day moving average. Those were anchored VWAPs and the inclining 5-day moving average. So these bullish megaphone patterns, when you get a breakout, you can typically see a breakout, a backtest breakout, and then you have a minimum target of around 60% of this line. So that's just a little bit more than halfway. And as you can see, if you're looking at halfway, which was basically the upper weekly expected move, okay, if you measure that, we just about tagged up in that area. So we've already met or around that measured move for this bullish pattern. We have that negative divergence on the RSI. So is this something that you want to just run into? If you do, and the bullish price action continues, well, then just be aware that, hey, we have this upper daily expected move here, where we have a negative divergence. So you might want to be a little bit more tactical in your approach on the lower time frames to be a little bit more aggressive in profit taking. If we start moving to the downside, I want to just point out the JWAP down here, which is the Jerome weighted average price. And that's right by that lower daily expected move, which is still outside of the weekly expected move. And remember, 68% of the time it finishes within that area. Doesn't mean that it has to close within there, because we're just dealing in probabilities, okay? But if it starts pulling down further, start looking at the week to date. But even if it pulls down up to that point, even, big move, and people are like, ah, ha, ha, it's falling over. Okay, well, we're still above a 5-day inclining moving average. Okay, so it really depends on, are you short term, are you intermediate term, are you longer term? Because if it comes down here and you're longer term, that might not bug you in the slightest bit, all right? Why? Well, when would it bug you? Well, if price comes down, it bounces up, and then it comes back down, boom, and does something like this. And then all of a sudden you start to see the 5-day moving average neutralize itself. So instead of being bullish, right, then it starts to go neutral. And then potentially if price starts breaking down, it can go into a declining phase. And if you understand that, I'll just draw it out. There are 4 stages to the market, right? You have accumulation, you have markup, you have distribution, you have decline, and then you have accumulation again. And this is what we look at the 5-day moving average at, where if we take a look back at this chart, right now we're in a markup phase. It's a stage 2. So you're bullish up until the point where this starts flattening out. And then you have to be a little bit more cautious. It could be a period of consolidation and move higher, or it could be distribution and we go into decline. Okay, so that's why I like looking at that personally myself. If we take a look at the Nasdaq 100, we hit a new yearly high here too as well, and we're pulling into this bear market rally high over here, which may act as a potential area of resistance. It may not. This thing has been blowing through the water. RSIs continually get pretty frothy up there too as well. If you take a look at the 15-minute chart, we had a pretty similar type pattern showing up. We have the negative divergence on the RSI. We're above the JWAP, above the week to date, above the month to date anchored VWAPs there too as well. We have one more trading day left. Remember, like I said, a lot of volatility can happen, being that it's triple witching. We have a 374.77 upper daily, 365.75 lower daily expected move, and we are obviously well outside of the weekly. Speaking of tech, XLK actually hit a new all-time high today. However, that is adjusted for dividends. So if it's unadjusted for dividends, we didn't actually hit that all-time high yet, but we're not too far off. So if this starts pressing up, we do have this prior area. After a very strong move, you always want to ask yourself, okay, well, did it come up here and digest and now it's flagging where it's consolidating and it looks good where we can break out? Or is it going straight into a prior area of resistance? Not really the place where you want to be like, yeah, I'm going long right there. Can you get lucky and can it just go, wee? Yes, absolutely. But a lot of the times after a strong move, you might, and if you enter in, go full boated over here and it goes up a little bit higher, you can trap in, and not to say that it won't go, up further, but say if it does this, where you get trapped in a position, it flags, and then eventually takes off, or if it comes back down. You got to think about that, because that is capital that you're locking up for later. So it all comes back to your time frame. All right. Let's take a look at indicators. I want to just retouch on the seasonality, right? It's still following pre-election year as of right now. It's moving into an area where it starts to flatten out to go down. So that is something to be aware of here into the middle part of June, which we're here in the middle part of June, going into the 12th trading day of the month. If we take a look once again at the Nasdaq pre-election year, you can see that this has been obviously going up, which makes sense if you look at the pre-election year, which is blue. But remember, coming into July, right, that's where you start to see that peak, and then it starts to kind of just taper off all the way till around November. Okay. Looking at the zones. So today, these are the zones. What are the zones? The zones is a way for me to extract a lot of information from this really cool indicator. Think of it as an advanced Bollinger Bands, and I apply them all here where you can quickly analyze a lot of markets. These are what I share with the Discord group every single day. They're updated, they're dynamic, they're always changing, but I share not only these products, I share a whole host of products from a global perspective, fixed income perspective, currency perspective, commodity perspective, volatility perspective. And then lately I've been doing miners in China stuff there too as well. What I'm showing you here is basically when the ranges start lighting up red, it tells you that price is reaching up to the higher band, okay? When it gets up to the higher band, you want to be a little bit more cautious. When it gets to the lower band and it has a bullish trend, that's when you want to get a little bit more bullish, okay? And what I want to call out here is on the Qs and XLK, I noticed that if we look at yesterday, the high of this band was 375.27. Today, the high is 375 for the Qs. This is the first time in a while that actually the high end of the zone is pulling in, okay, which could represent that price may be getting ready to consolidate this move. So that's something to be aware of. Now, remember, that can change tomorrow, right? Things can blow through the roof. But as it stands now, we haven't seen a down tick for a few weeks, and now we just have. XLK, 177.86 to 176.66. So this right here was a pretty significant move to the downside. So XLK, tech sector, that could be one to potentially watch for or start to hone in if you're long. Start to look at your risk parameters where you can maybe potentially do it of multiple ways. You can leave it how it is, or you can take potential partial profits, or you can update stop losses. There's multiple ways that you can manage your money that comes to you. That's up to you. So that, yeah, and why I'm reiterating that is because that doesn't necessarily mean, hey, short it, right? It doesn't mean just, hey, go short. Can you? Yeah, if that's how you want to manage your funds, yeah, then that's up to you. Okay, so if we look at growth to value, the rate of change actually crossed down through negative here. It's still floating around with a pretty gnarly negative divergence on the rate of change and the RSI there too, as this has been cranking up. So this could potentially represent, once again, a period of consolidation or potential pullback. If this thing, I would like to see a stronger rate of change to the downside to make it more authority in this, but we just haven't got it yet. Nasdaq Composite Bullish Percent Index still overbought condition, as we've been pointing out since it got there, because overbought can stay overbought for a while. The NYSE Bullish Percent Index is cranking up there to a pretty overextended area as well, according to the RSI. But if you look at the chart, well, we've been higher areas prior, so keep that in mind too. The NDX is reaching above a 70 level, which has been pretty high, especially when it crosses back down through. I will call out, boom, a higher high, lower high in the RSI in the Nasdaq 100. That is a negative divergence. Then to top that on, XLK, that negative divergence still remains there as this thing is creeping up to nearly 85, which has been a rare occurrence in the prior year, okay? BPOEX, which is the S&P 100, also creeping into overbought conditions. SPX, overbought conditions. The NYMOT, which is the NYSE McClellan oscillator, has a negative divergence here too as well. We have a high, lower high, high, lower high. And if you look at this at a bigger time frame, we have a high, a lower high, and then we have a high and a higher high right there. And I marked out all the other times we had negative divergences where you saw the market consolidate and or pull back. And then you could also see the bullish divergences here as well, because it plays both ways, right? Boom, market up, market up, market up, market up. So this has been a pretty good indicator to use to give us confidence to go long and confidence to start honing in on our risk. If we take a look at bonds and yields, the 10-year yield backed off a little bit today after all those macro reports dropped. Okay, but we're still really just consolidating right up here. If this starts curling over, perhaps that means we do start pulling down, which would offer up some potential relief there on many markets, including the 30-year mortgage rate, because that thing has been cranking. I know because I have to get mine situated here momentarily. TLT popped up, closed right around where it opened, right? Bonds down. Sorry, yields down, bond up. You can look at multiple products. This is TLT. You can look at SHY. You can look at IEF, etc. I'm just showing you this because I still think that we're in a stage one of the business cycle, which means bonds typically go up, stocks, commodities typically go down, okay? And that's not obviously what we're seeing all around, but that's okay. I've talked about that on prior episodes where we look at the sector rotation model, where we typically, I mean, it's making a lot of sense right now. I'll just say it really quick. The sector rotation tells you that when we're about to enter into a recession where the business cycle starts to move into stage one, the best performing sectors from a relative standpoint is XLK, which has been happening. It's consumer discretionary, XLY, and I believe the other one was XLC, which is communications. I'd have to double check on that one. But okay, let's look at the dollar. The big move today in the markets, well, was perpetuated by the dollar drop. Okay, and the dollar drop came on the hands of the ECB. The euro went up, dollar go down, markets went high, gold too. That negative divergence is back and getting stronger. So just be aware that if the dollar finds its legs, if it sees strength, that could very well affect markets, including gold, including the S&P 500. You can see here the 90-day, this is the 15-day correlation. This is a 30-day correlation. Today's move really brought it. It's still positive from a 30-day perspective, but you can start to see it drop. And then you can see over here, it's negative, negative, negative from longer time frames there as well. Okay, that's all I got for you in today's episode, everybody. That was a lot. Have a good night. See you later.